Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Tuesday. We're at the 10th of June 2025, and we're getting on to 4:45. I'm putting this all out early as I have some events, private ones I have to do tonight. So I wanted to get this done with you. As you can see, another update in the stock market. The metal's selling off a little bit. As we take a look at the dollar, it gained minor, but the British pound got hit pretty hard today. It did go to 134.57. I last night smelled that. I was telling my subscribers to move stops on long positions dramatically higher, and that was a good move as it turned out. All the energies down today, getting hit in the natural gas the most, as I would expect it's going to be because of the mild weather we have in the center of the country and the East Coast. Bonds and notes, well, they're looking very hard. What should they do in front of the inflation reports coming out starting tomorrow? Now, before we get too far, let me remind one and all, we have news tomorrow. You got the mortgage bankers' numbers at 6 a.m. I can't imagine they're going to be stellar. I don't care if the rates fall a little bit. They're still near 7%. The U.S. May Consumer Price Index, this is the big daddy in the morning. And we'll get both core and regular. We'll go through it in the morning as we cover it all. For those of you that get my newsletter, all the estimates are in my newsletter, so it's covered there. The EI weekly petroleum stock estimates will come out at 9:30 in the morning. And to my surprise, US Treasury Secretary Besant is mounting. He might be on the plane already, returning to the U.S. for an 11 o'clock meeting in the morning with the House Ways and Means Committee. I'm surprised he didn't stay to finish up because Lutnick stayed and Greer stayed. They're still not done negotiating with the Chinese. So I guess they'll have the Treasury Secretary can meet via video and so on. Not when he's in that meeting, though, but with the time differences, it's going to be a rough time on it. A lot of words today coming out on Bloomberg that sources are saying a potential candidate, I want to make this very clear, a potential candidate to be the next Federal Reserve Chair could be Besant. That's no surprise. I don't know why people are worrying about it. And the White House, of course, goes, no, that's a lie. He's a logical candidate, just the way Yellen was a candidate to go into the Treasury after being the Fed chair. So these things can flip back and forth. It depends. A lot depends. And we'll see what Besant wants to do. And it is not time for Fed Chair Powell to leave, and I am not insinuating that, okay? He said he's going to serve out his term. He's going to serve out his term. I really believe that. All right. So let's go to the chart action and see what we have. When we look at the weekly S&P 500, you're coming up, you're approaching the all-time highs in the market. It's been a wall of worry, and it just keeps climbing it. Nothing stops this rally, but nothing about it's dramatic. It's very well contained. No day is having big moves. I think you'd agree with that. You don't have anything like you had back here. And look at how this market has just gone pretty close to nonstop since April 7th. You had this one return, and then the market took off to the upside. Is the market going to go for the contract highs? Your guess is as good as mine, but the way the momentum's going, yes. Now, what would turn it around is if we found that nothing was done in this marathon negotiation. I rate that, 0.1% chance, so I'm thinking 99% probability plus that they'll get something done in this deal. Why would they all be talking? They asking each other about the families? I don't think so. So there's going to be something out of this coming. The question is how the markets look at it. But I view it, no matter what they do, if they do something, it's a sign that this part of the market's reached a detente and that things can get better. Does that mean that the Trump administration's going to take its foot off the gas? It does not. But it isn't going to go from full steam ahead. It's going to go into the 20-mile-an-hour zone. Got the difference? When we take a look at where these markets might go, we have another outside day up. So the first thing I'd look at is you don't want to see today's lows taken out tomorrow. Forget the events of the day. You have an outside day, you should not take out that day's low on the day following it. When you do, it's generally not a good signal to continue in that direction. You're over the upper Bollinger Band or not? Well, You're at 15, what are we? The settlement 60.45, the band 60.56. You're just underneath it, but that's the number that's curtailing the market. You have an embedded reading, I believe, now in place here. Both numbers on the close were over 80. They were yesterday over 80 and the day before. It's all you care about. So now the breaks are being bought, in my opinion. There's a way to do it. I won't share it with you here, but that's what I think the pros will be doing, is trying to buy the breaks, but there's a setup that I think they'll look for. When we look at the NASDAQ, did we embed here? Both numbers are over 80 on the close. When we go back, both over 80 and both over 80 the day before. So the two strongest indices did the embedding. So they changed their posture from a bear market rally in terms of momentum, in terms of just momentum. Price has been bullish, but the momentum, we didn't know what it would be, to locking in the bullishness. And you can see that right there. When we come to the Russell, this is not the case. It is a market that is still overbought. It can embed, but it'll come later to the party. And the same thing can be said of the Dow. When we go to the DAX, you're slipping back underneath. And when you do that, you normally make a run at the 18-day average. You tried that yesterday. You had a bit of a rally today. I wouldn't be surprised that you hit that tomorrow. And from there, the market will tell us what it wants to be when it grows up. When we get to the bond market, it's still in a bullish move. You've got a pattern of higher lows, higher highs, and it's over the 18-day average. It unravels if you take out the lows of yesterday. But until that number is taken out, the market is saying it's got a bullish bias. It's in a minor uptrend at this point in time. That is not the case in the 5-year notes, the 2 years. None of them are like that. They are all more or less like this. Higher high, lower low, and just playing around in the market. In the dollar index, it is a proper grammar bear market rally that's trying to correct the oversold condition in here. The resistance is the 18-day average. Close over that. That changes the posture of the market to bullish. You got to close over wherever the 18-day average is. At the close today, it was 99.46 when you round it. You lost the bullishness in the momentum of the euro. You're trying to get a break to go down to the 18-day average. We'll see if it's capable of doing that. You did that when you lost the bullish embedded reading in the pound. Kaboom, door open, the market went right to it. And take a look where it went today and where it stopped. That's the importance of that. So this was a bull market break. That's what I call it. The bull, because you're still over the 18-day average of closes. That sets me up. Is the break part of a bear market, breaking further down, or a correction in a market that's been bullish? That's what I'd view it. When we come to Bitcoin, you just seem to me to be caught between the upper, lower, back maybe to the upper Bollinger Band, but I am long-term very friendly. I think from this, the market will create a possible base to move higher again. We'll see if that works out. When we're looking at the Brent, you can see oil, you're overbought up to the band. Look for the market to have trouble at that band. Besides that, you got the 100-day average here. Pullbacks, though, if you can get away from being overbought, will probably attract buyers. In WTI, the same thought process. You got up to the 100-day average, though, here, the upper band, and you are overbought. It either embeds or you're in a funny area to try to do anything with the market. As I said yesterday, I think that you've reverted back to the bullishness in gasoline until you take out the low that I'm pointing to here, which is the 202.49 area. It could reach for the upper Bollinger Band to find the resistance. Last but not least, without hot weather, you're probably not going to get anywhere near the draw on nationwide natural gas. Nationwide, it's not just you're mild in the Midwest. You're still pulling it in Texas, Arizona, New Mexico, parts of California, but it's not the big amount that you would normally draw. Remember in Texas, you get the heat, it's so bad they wonder if they have the power. We've seen that all the time. Well, we're not there yet. And you're certainly, I can tell you in the Midwest, you're in the 70-degree, maybe you hit 80s. That's pretty much what's been typical. And I talk to my friends in New York, the weather's absolutely gorgeous on the East Coast too. So that's what's weighing on these markets. But Tomorrow's the last day for you to look at the silver report. Take a look at it. Goes off the board on Wednesday. IraEpstein.com. It's here. We have our icons. Take a look, and I'll catch up with you all first thing in the other videos tonight if you watch them, or in the morning video. We'll have more news on how things are going in China by that time as well. You take care.